So the presentation what I'm going to do here is wealth creation from stock market. I hope I'm audible and it's visible, right? Can you just ping in the group? Yeah, thanks. So first of all, you know why we need to invest, because we are currently living in a country or world, we can say, where the inflation is too high. Inflation is getting higher and higher. If you are just checking, then you can see 5%, 6%, 7% inflation rates as the inflation given by the country. But the actual inflation data changes a lot from that. That is just food price or consumable price or day to day inflation. But if you consider the other, if you consider the school fees, hospital bill, other expenses, then you will come to know that the inflation is not just 5 or 6 percentage, it is much more. Suppose if you are going to an hospital 2 years back, the same procedure would have cost around 30 percentage lesser. So the hospital bills are rising by 15 percentage or 20 percentage or 10 percentage, if you say, then you cannot, the inflation cannot be like 5 percentage or 6 percentage, you know. So in short, everyone needs to be invested. Even if you are earning 10,000, 15,000, 20,000 per month, if you want to be financially free, if you want to retire peacefully, or if you want to be in a good condition after your retirement, you have to invest. Luckily, we are in a country which is growing at a high pace. So we are one of the topmost hotspot destination in the world to be invested, to get invested in. So if you are considering the Indian equities as a long term story, India has grown around 13.8 percentage, that is 77 times in the last 33 years. If you consider Nifty 50, from July 1990 to currently, the growth is around 77 times. The growth is around 77 times. So, India is a good place for the good place to invest it in. Okay, so someone again coming. This is becoming a menace, guys. Please come fast, otherwise I will not be able to admit everyone. Okay, so India is a good place to be invested in. So those who are telling we are not invested in Indian market, we are invested in foreign market, then they are liars. They don't want to disclose their actual holding, or they are not making any profit. That is the truth. Even everybody, every person, like every corporate is invested in Indian market by some way or other way. If you are looking into the global leaders of the investment houses, every investment house is invested into the Indian market in some or other way. I'm getting some messages that it's not audible. Okay, it's audible. Okay, so what we are seeing, so this is a graph, this is a chart which is comparing the exports and imports. So the total share of the exports, so if you are checking, almost all of them are growing at a higher pace. If you check the oil plus coal is increasing, chemicals are increasing, machinery is increasing, agriculture exports are increasing, textiles are increasing. So sorry, textiles are decreasing. But if you consider the entire the scenario in the textile segment, then 9% of textile share is quite good in 2022, because textile is not in the proper business cycle. Metal is also not in the business cycle. Gem and jewelry is okay type, because of high gold prices. Gem and jewelry is also not working. Okay, so in short, most of the Indian manufacturing in we are seeing an increased share of exports. in India compared to the 2020, 2004, 2006, whatever year you take and compare to the 2022, 2024, you will see an increased share. So our country as a manufacturing, we are growing ahead. Some people may tell that we are not manufacturing well compared to the Vietnam. We are not doing well compared to Taiwan. See, Vietnam and Taiwan are small companies. They have a small base. We have a larger base, so we may not be able to grow like them, but we are making a significant movement. So if we are talking about the bigger size countries, they are growing much slower compared to the India. But as a big country, we are growing in terms of all kind of export. Why this is so? Why Indian markets are comparatively easier than the other market? Because India has a lot of small size companies which are very tiny size companies compared to what we are seeing in the US, what we are seeing in the UK or China. So when we convert it from dollar to Indian rupees, the market capitalization will be comparatively very low. So it gives a lot of opportunity to grow for these companies. So everyone is invested in these companies, and everyone will be interested to invested in these companies. So same thing, when you say the number of 10 baggers which is produced in the last decade is highest in India compared to the other countries, which is followed by Indonesia and Brazil. So, if you take these three countries, India, Indonesia, and Brazil, these three countries are large countries. Okay, these all are growing countries. These are not small countries. So why growth is happening in these three countries? Because of the population boom. Population is booming. So the number of people who are earning, who was previously like earning low income group, they are upgrading themselves into the middle income group. Those who were previously like a mid income group, they are becoming like into the high income group. That's what make these countries special: India, Indonesia, and Brazil. Only 3% of mainland Chinese stocks gave 10x returns over stronger GDP growth, because their companies are already became so big. So so what happened is their growth is much restricted compared to the compared to the other ones. Sorry, somebody wants to join. I'm repeatedly telling, please join. Okay, so India is in short, India is a good market which is much favorable for making 10 baggers, 20 baggers, or 30 baggers. Maybe the 100x will be much difficult, but a 10x is much easier in Indian market. Maybe many of you might have been captured one 10x mover, or two 10x movers, maybe 10 10x movers. So there are so many 10x movers in the Indian market, which is not so difficult to capture. Okay, so if you compare this with Indian market with other market, it is much difficult. Okay, so what are the four pillars? Four pillars of the Indian growth. First one is consumption. When the Europe is struggling, India is consuming so much. Okay, 140 million households to be added in India's middle class by 2030, which would drive Indian spends. And rapid urbanization, that's what we are seeing in India. Around 56% urbanization by 2030 will lead to the better consumption prospects. And infra investments, government is pushing rapidly for the infra investments, which is 8 to 9 percentage of infra spends as a percentage of GDP would enable 5 trillion economy. Around 70 percentage of national infra pipeline targets to be achieved by 2025. So Indian government is investing huge on infrastructure. If you invest in infrastructure today as a nation, you will prosper in tomorrow or coming days. That is a very important take. So whatever government is doing, whatever they are doing as an investment in airport, seaport, road, bridge, everything will contribute to the economy. So that will pave the stones for the upcoming development in the coming years. If you check the corporate capex, two-thirds of the companies saw debt reduction in 2021, best place to drive the capex. Government is also investing huge on the infrastructure. So private companies, big companies, everybody is they are also developing. They are doing more capex. They are putting capex. They are growing capex. Okay, so rupees 3.5 to 4 trillion capex to be invested via the PLI scheme in the next 3-4 years. So government is expecting around 4 trillion capex in PLI. So if one we are giving discount to one company, so that will indirectly boost 10 other companies. So if you are invested in any of these companies, either the parent company or those companies which are indirectly attached to the main company, to the PLI company, they will also get benefited. Then again, innovation, 80% of transactions to be digital in 2013 digital India, 100 plus unicorns with a total valuation of 340 billion. So many, you all know that many startups are booming, many unicorn startups are coming up. So as in technology wise also we are seeing so much of boom. If you check the consumer classes, diverse in their consumer classes, Indian population, rich people around 12 crore people are rich in India. That means they are getting around $12,000 per capita. This is government estimate. If they are telling it's 12 crore people, the actual will be around 15 to 16 crore. They are the actual rich Indian population. In a country with a huge population like our 16 crore people are earning, suppose they are earning around 12,000 or $13,000. So that means we are much ahead, we are much bigger than many countries. So many countries might not have this much of 12 crore population. Many countries have a population size of 1 crore, 2 crore, 10 crore, 5 crore. But in India, the rich itself is around 12 crore documented. So the actual data will be around 15, 16 crore, I'm expecting. Then the aspiring India, they are $3,000 per capita people, they are around 10 crore. And growing India, that's around 120 crore people are around earning around $1,500. So that is, if you are just checking, comparing it with 2022 with a projected 2030, we are expecting much growth in the middle income group and the lower middle income group. So there will be a consumption boom in the middle income group and lower middle income group. So if you are focused into a product which is mainly focused mainly into the middle income group and lower middle income group, there is a higher chance of becoming successful. So if you are an entrepreneur by any chance, then your target audience will be ideally middle income group or lower middle income group than the high income group or low income group. So as an investor, if we are focusing more into this group of people, so we have better chances of making our returns higher. So then again, where to invest? We have lot of things to invest. Equity mutual fund, SIPs, direct equity, PMS, do it by yourself, do it with proper allocation, different assets like equity, debt, retail, gold, alternative class. So where to invest? These are all are the available options. Where to invest is according to you, according to your habit, your investment habit, your investment style, your psychology, and lot of other factors also. So but what I would suggest is stay invested in any sort of form. If you want to invest in equity SIP, just do equity SIP investment. If you want to get invested directly in equity, just do direct investment. But what I will suggest is stay invested. That's what my first you need to know that what type of investor you are. You are a long time investor, you are short time investor, or you are ultra short time investor, or FNO investor, or intraday investor. For a long time investor, if you hold your 60 percentage of stocks more than 1.5 years, you will be considered as a long time investor, according to me. According to government, if it is more than 1 year also, you are a long time investor. For according to me, if you are holding stock, if you can you hold your stocks 60 percentage of your portfolio more than 1.5 years, then I think you are considerable for becoming a long term investor. Then short term, if you can hold more than sorry less than sorry more than 1 week, up to 1 week to 1 month we can say, or then you are a short term investor. And then ultra short time, if you hold something less than 1 week to more than 1 day, then you can be called as an ultra short time investor. Then intraday and FNO investors, as you all know. Then again, you need to think about your investment style. If you are making profit, yes, if you are making more than 30 percentage of profit with your investment style, yes, you can be a investor. You continue what you are doing, you are successful with what you are doing with the current condition, with current market condition. If you are making less than 30 percentage, please rethink your style of investment. Please take your PNL report, please check through your trading journal, and please check what mistake you are making, please rectify it. Okay. Then again, if you are not making 30 percentage profit, then you should immediately switch to the mutual funds, or you should change the strategy. If you are a long term investor, and if you are not making at least 30 percentage growth in your portfolio, I am just telling the current condition, you may not be able to make 30 percentage growth in every year, I mean every coming years. But in the last 1 or 2 years, what we have seen, what the type of bull rally which we have witnessed in the last 2 years or 3 years or 4 years, you should make at least 30 percentage gain over the total portfolio. That's what I believe. Okay. So if you cannot make such a 30 percentage gain, you just change your strategy, you just change to the mutual fund, or you have to do some rectification of your investment style. Then the major thing which I would suggest is be calm, be quiet, be just think, just take enough time, just take your decision slowly, think 5 6 times. That will be my suggestion. Be calm and cool while making your investment, while selling your holdings, while putting money into the new stocks. Okay. Then just select the type of investment which suits for you. You can, you must be either a private company employee, you could be a government employee in a busy environment, and you should, then if you are something like that, if you are a employee of corporate or government, then you should more focus into the long term investment. So if you are a government employee, you are a private employee, then you should not focus into trading, because it will affect your career as well. If you are losing your job, then you cannot make any capital for the investment. So be careful on your job. Don't do trading in during your workplace, because it won't be do good for your job as well as the trading. If you want to become trade, do it in your leisure time, do it in a free environment, do it in a calm environment, because trading requires good mental peace, good mental strength. In a busy environment, you may not be able to make the proper calls. So practice it in a safe environment, good environment, and calm environment which allows trading. Okay, otherwise it will break your primary income. Your primary income will be in trouble, so you may not be able to fund money for the trading later. So if you are a retired person, then you should check only for the long term investment. Safe stocks, you should invest in so called safe stocks, preferably large caps and index funds. Fully dedicated to market. If you are ultra short time investor or FNO investor or intraday, then you should be completely dedicated to the market. You should just follow the you should follow you should be completely dedicated to market, and you should not do anything if you want to be successful in ultra short time FNO or intraday. And my first and last advice will be, do not mess with your primary source of income with equity trading. If you are so much confident, unless you are not confident regarding your primary income, don't mess with your primary source of income. If you are a government employee, do your job well. If you have some free time, do your trading. If you are a teacher, don't do trading in teaching hours. If you are a if you are a clerk, don't do trading while dealing with your office work. Be focused on your primary income. You may not think that you may think that this is a very small advice, but by seeing the life of many people, by seeing work habits of many people, i I think this is very relevant. If you are doing something during your working hours, it will affect your working. It will definitely affect your job one day also. Okay, please take this advice. Then what we are here is for finding a multi-bagger. Everybody needs a multi-bagger stocks. Okay, so there are two ingredients for a multi-bagger. These are the most common ingredients. One, the stock should show growth in earnings and growth in p multiple also. So the number of shares should be constant, plus there should be growth in the earnings also. Then only this stock will unlock the value. Then only this stock will grow in 10x, 100x or so forth. If stock is earning well and if the number of shares are increasing, then the growth, the EPS will not be that much significant. So the growth will not be, the share price will not grow that much. So for a PE expansion, the earnings should grow. Growth in PE multiple should be there. So I have developed a strategy for finding multi-baggers. This is actually a framework which inspired from many people, including Mr. Vijay Kidia. He has a smile strategy. So this is a slight modification from the strategies which many big people who earlier developed such strategies. One is sunrise sector. Second is moat. Third, the company should be ant size. Fourth is reasonable valuation, and fifth is trustworthy promoter. If the company is in the sunrise sector, then only the sector can grow. If the sector can grow at a rate of 15 or 16% CAGR, then if you are invested in a company in that sector, the company will be able to grow at 20 or 22 CAGR. If the company has a specific moat over the other companies, then it will be able to grow much faster compared to their peers. So again, the company, if the company is a small size, like if it is an ant size company, then there is much much bigger space for the company to grow. If you are selecting a company, if you are selecting a petrochemical stock, if you are taking Kotari Petroleum and if you are taking Reliance may not be able to grow as fast as Kotari Petrochemicals. Okay, so you should select a company which is in the sunrise sector, which has a proper moat, which has which should be ant size, which should be small size, and you should enter at a reasonable valuation. If you are buying a stock which is at 100 p or 1000 p, you may not be able to make any profit in that company. If you are able to enter in a reasonable valuation, then only you will be able to make any kind of profit. Then people will ask how I should find out the reasonable valuation for a stock. What is a reasonable valuation? So according to me, there is no such reasonable, there is no value such as a fair value. There is no such book value. According to me, what is if you are seeing around something around 200 ema, that is the reasonable valuation. You cannot decide valuation of any company. The market will decide the valuation of a company. You just don't do anything, you just follow 200 ema or 200-day moving average. If company is trading around a value in 200 days, you just try to buy around that valuation. That will be reasonable. Okay. So then the fifth and last, the promoter should be trustworthy. Then only you will be able to make any sort of development in that company. In bull market, many companies will come, many companies will go. They will just try to loot the public money. They will just try to show that they are superior, they have a good management, they can do this, they can do that, blah blah stuff. So what I should what I suggest is, you should check the promoter background. You should check, you just check. And nowadays we can check everything in the online, everything you can see. If there is a criminal case filed against the promoter, you can see that also. You can check the history of their previous investment, what all things they have done prior, what all private companies they have, what all other listed companies they have. You just check all these things, then you will come to know that promoter is good. Promoter has grown this company from this much to that much. Promoter has good education background. Promoter is not a criminal, he has not done any fraudulent activities. These things you can check from the online. Or if you are more like a more influential person, if you are someone from Mumbai, Delhi, or somewhere, you can go to that place. You can check in your group. If you have some entry in some good investment group, then you can just ask the other people, how is this guy, uh, he's credible or not. Okay. So these five things you can just write down. These five things, these are my smart strategy. If I select a small cap, I will try to select with this smart strategy. Almost last 3 to 4 years I am choosing the this smart strategy. You see, my many of my stocks are hitting 10x, 15x, 20x. I just try to filter my stock selection through the smart strategy. So this strategy is very successful for me. I don't know how will it work in the current condition, but still I hope it will work. Okay. So about 100 baggers. So if you check the 100 baggers, there are these are the companies which has given 100 baggers in the last 20 years. It's approximately around 30 companies only. So finding 100 baggers are a difficult task. It is a very 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 difficult task. In fact, even if you just check 100 baggers, the fact is they are not just becoming a 100 bagger. They are becoming up to 6 4 8 5 times. They are becoming much bigger. So my suggestion is, in India, finding 10 bagger is comparatively easy. We have seen the previous slide. That slide was clearly telling, in India finding a 10 bagger is easy, which is much easier than the other companies. But if you check the 100 baggers, then it is very small. So primarily one person should focus on company which can double. If you are a long time investor, your focus should be on the companies which can double and do double or triple or do a 10x bagger. You should aim at a 10x bagger or 2x bagger or 3x bagger. Then you should hold. Then you just target for a 100 bag. You should not focus on a company which with a 10 crore market cap, so that you are just telling, yeah, I will just invest in a 10 crore market cap company so that it can become a 1000 crore market cap company. But you should focus on a company with at 20 crore market, sorry, 100 crore market cap, so that it can become a 1000 crore market cap company. Okay, so finding a 10x bagger is much easier in India than finding a 100x bagger. So again, you need to check one more thing. These are like in last 20 years data. So you may able to hold a stock for 20 years to become a 100 bagger. Okay, so you need to hold that stock till that much long period. Many of us may not hold that stock for a 20-year time frame, 15-year time frame, 10-year time frame, or that much bigger time. So you should be that much of you should be that much confident. You should be patient enough. So what I suggest is, you may not be able to hold that much of. I have seen many interviews of big investors. So what they have done is, they are investing for a long time, right? So they may not be able to block their entire capital in a stock. So what they are doing is, they are building their positions, they are selling their positions, they are rebuilding their positions. So I would suggest the same thing. If you are invested in a company, you stay invested, but you do not take a complete exit from any company. If you are seeing a potential in a company, you just, if you want to, you I would suggest everyone to book profit at some point of time, because you cannot hold a company for an infinite time period. Okay, you are not a promoter of a company, then you cannot hold that company for infinite duration. If you are feeling like you are okay, this share is overpriced, this is much become popular, or if the stock is reached your target, you may have a target. Okay, so if you are feeling like, okay, I am satisfied with this stock, then you just take the just take your capital out of that share. Let the free shares to be in. Don't do anything with the free shares. Okay, you just hold it. You just hold it for 10 years. You just hold it for 5 years. Don't think about that. Otherwise, what you can do is, you can book entirely from that account. So if I have an account in Zerodha, okay, so I have invested in Good Luck India. So I invested in Good Luck India around 400 bucks. Okay, so at 1200 rupees, I'm thinking, Good Luck India has reached like top, so I can sell Good Luck India at 1200 rupees, and I can sell everything, whatever I and whatever I'm holding in Good Luck India, I will sell at Zerodha, my Zerodha account. Okay, then I have one more account in Angel. So again, you just check how many, like, what is your holding amount. Like, I have invested 10,000 rupees in Good Luck India at suppose 300 400 rupees. Now I'm selling 12,000 rupees. Good Luck India, I'm telling, sorry, I'm selling Good Luck India at 1200 rupees. Okay, so I'm selling my entire capital, but I'm just keeping whatever, like, for the 10,000 rupees, I'm keeping the number of shares. I will keep around 8 shares in my Angel account. Okay, so I will not touch the Angel broking account. This share will stay. Okay, you may not be able to see percentage in that condition, but if make it like untouched. Don't trade in the free shares. Okay, so you can try that also. So that will also give some kind of patience, that will give some sort of free money to you, so that you can trade also, you can find your good bets also. So that is my advice. Just take out your your capital from that. Just hold the free shares. Okay, if you want to build a position at some other point of time you can again build in your main account. Okay, and then whatever you are holding from free shares from that time you can hold. So that will make your holding, make your long term investment much more easier compared to the holding entire money. Okay, so that's my advice. So one other method which I am following is my 60-40 strategy. It can be 70-30 at times, can be 80-20 also. Okay. So that is also my other strategy. So my focus is on long time investment. Okay. So I will do long time investment basically because I have a job, I have work. So my focus is on job. So I am doing whatever I am saving, that only I am investing. Okay, so around 60-70 percentage of my investment will go to the long term investment account. The other 30 or 40 percentage will I have there. So either I will keep it as a free cash or I will keep it as a trading account. So I will trade from this other amount like 30-40 percentage or whatever I have. I will trade from this amount. So everybody has a trading strategy. Like I have a trading strategy, you will also have a trading strategy. If I'm earning, I'm making money, then I will keep on doing the trading unless my stop losses are hitting, back to back stop losses are hitting. Okay, if I'm hitting my stop losses consequently for 2 to 3 times, repeatedly I am making losses, or repeatedly my stop losses are getting hit, then I will try to reduce my 40 percentage or whatever the trading capital. So what will happen, I am coming out of the positions in my 40 percentage of amount. Suppose I have suppose I have 10,000 rupees. Okay, 6,000 rupees I have invested in my long term account, and 4,000 rupees I have in my trading account. So I am making money in trading account, so that my trading capital has grown to 10,000 rupees. Okay, so then it hot stop loss has been hit, then I will change my, again divide my capital more into the uh, investing account, then again into the trading account I will divide again and again. Okay, then if I'm again finding some difficulties, I'm hitting my stop losses, market is not favorable, my this portion, this trading portion will again will start sinking. Okay, it will become 4,000 I have invested, it has, it may go to 6,000. Okay, then again it will come to the 3,000 or 2,000 rupees, or it may come back to the 4,000 initial rupees also. Then I realize that something is bad happening in the market, the market is not favorable to you, you should be careful at this point of time. So this time I will be very careful, I will check market, I will check my companies, what is happening in my companies, is there any selling is going, is someone is selling, some bad sign is there, is there any issues with the economy, everything I will just check. Okay, so if everything is good and well, then I will hold. Okay, most of the condition it will be like that only, I will continue to hold. If I feel something is very bad, then I will try to reduce my long term position also. I may sell around 25, 20 to 25 percentage of my long term portfolio also, if I think something gross abnormally is happening. Otherwise I will do nothing, I will do nothing with my long term portfolio. My long term portfolio will be stay intact as it is. Okay, so that's what I'm doing. So after a crash happens, or after a big stock market correction happens, I have the my 40 percentage of money, I have my 40 percentage of money in the my other account. Okay, so this money will be much bigger than my long term investment account here. So this money will help my long term account also to become bigger. Okay, Again, if a bull market comes, if again a rally comes, this 40 percentage I can utilize for building my positions, long term positions, for trading, everything it will be useful. So that's my 60-40 strategy. This will help me in many ways. Like, it will help me to identify the good sectors, good trading setups. If it will help me to identify if something, some problematic is happening, some unfavorable environment is happening in the market, it will help. Okay, so these are the advantages of this 60-40 percentage of strategy. Okay, so you can also try this. If you, I think most of us have a tendency to trade than stay invested for a long time. I think 90% of the people have a tendency to trade than keep money idle and sit and do nothing. So everybody should try this strategy. I think this is much beneficial. But my suggestion is, rather, if you are a long term investor plus you have some trading skills, then you can try this rather than doing entire trading. Like, I have seen many people who are just traders. They will just trade. They do not keep any stocks for the long time. They do not keep. They will just do trading, 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 and they will take their money out of the demat account, and they will, like, after that they will spend it for something else. Finally again they will have very much lesser money left. So that is a very, very, very bad thing. Do not pull money out of your trading account to your day to day use account. Okay, if you are pulling money out of your trading account, then it should go to the bank account which you park, which your money is getting returned from the Zerodha. It should not go to your salary account or your day to day account. Okay, the money which you are planned to invest should stay in the, either it should stay in the bank account or it should stay in the broker account. It should not be shifted back to your day to day activity account. If you are messing all this, then you will not be able to make any reasonable, like, you should not, you won't be able to make anything properly, because every money will get clubbed. You may not be able to keep accounts. So please keep an account which is exclusively for the trading, which is exclusively for the investment. Do not club it with your day to day account, your salary account, whatever it is. One bank account should be focused only for the investment. Do not pull money out of your investment account to your day to day account. Okay, otherwise you will not able to create wealth from equity investment. You can write it down. I think many of you might have made this mistake 100 times and you will be regretting this. This I have learned from many people. This I have asked with many. I have done such mistakes by myself. Okay, so don't do that mistake ever and ever. Then another advice which I am giving to you is, like, do not show whatever your profit to other. Do not put your screenshot, profit screenshot, as a status. I have seen many people, they are making money. Yes, it's a good thing. Okay, you are making money, then it's a good thing. One of my friend 2 days back posted a huge trading screenshot in his as a WhatsApp status. Around, he has profit of around 10 lakhs. Okay, so they just show it as, I got 10 lakhs profit in trading. Okay, yeah, if you are getting 10 lakhs profit in trading, then good and well. But again, there is a bad day, you may lose 5 lakhs in some other day. So you cannot put it as a status also, then people will come and abuse you. Please keep whatever profit you are making, whatever loss you are making, please keep it personal. Please keep it with you. Don't share it with anyone. You may, you may share it with your spouse, but Don't share it with anyone else. It is your personal thing. You are making profit, good, it's good for you, it's good for your family. Don't share it with anybody. Okay, why this is, some people may tell this is like a what we say is in Hindi people say it as nasar, in Malayalam people may tell it as kannu patya. Okay, so it is not like that. It means like there is something called satiety. Our brain has a psychology of satiety. If like if we are eating, our body has satiety centers. Brain will tell that it's saturated, your abdomen is saturated, don't eat more. Okay, if you are doing, if you are putting status in the Facebook, WhatsApp, Instagram, whatever, Telegram, whatever gram you have. Okay, you are putting as a status, your brain will feel that okay, this guy, we are reached in the top, we don't have to make much more money. Okay, this satiety sender will start acting. So please don't put your screenshot in public. Okay, please do not put any your screenshots, profit screenshot, low screenshot, whatever your capital, don't reveal that things. Okay, if you have that much of big tendency, just uh, delete the amount from that. Okay, then you put it somewhere. If you have that much of like tendency to put as a status or something, that is my other advice. I think this Google Meet is going to end in 2 minutes or something. Let me check. Okay, I think this will end in 3 or 4 minutes. We can join in the other link if this is getting end. Okay, so that's other thing. Then we can just check into this graph. Around 5 percentage growth compounding, like if you are growing at 20 percentage growth, it will take 25 years to get a 100 bagger. If you are going at a 25 percentage, then it will take 21 years. If you are growing at 30 percentage CAGR, then it will take 18 years to achieve a 100 bagger. If you are growing at 35 percentage, then still it will take 15 years to get a 100 bagger. If you are growing at 40 percentage, then it will take 14 years to become a 100 bagger. Okay, so the holding period for a stock should be at least 14 years or more to get a 100 bagger. If you are looking for a 100 bagger stock, then you should hold at least 14 years. The other significant of this 14 is like 14 is like 7 into 2. One market cycle is generally considered as a 7-year market cycle. If a stock can survive and survive for two market cycle for 40 percentage growth, with a 40 percentage growth, if it can survive for 14 long years, then this stock will be able to generate as a 100 bagger. Then again, it's if 50 percentage of growth happening for the 11 years, then it can be 100 bagger. But getting a 50 percentage growth in 11 year will be too difficult. It will be near impossible. Okay, so possible will be from 20 percentage growth in 25 year to 40 percentage growth in 14 years. Either you should hold a stock for 14 to 25 years, then you will be able to get a 100 bagger in real life. These are more realistic scenarios. You should be holding that stock for either 14 to 25 years. So you can use my previous strategy which I have told to you. Okay, just keep the free shares in your trading, sorry, in your broker's account for forever condition, like for 20 years, 25 years, whatever it is. Okay, so we can move more to the smart strategy here. We should focus more into the small companies with a long growth runway, volume growth. That means the company should be if an early mover. If you consider the company like a Tesla, this company has got a massive advantage as an early mover. This company is focused into the electronic vehicles. Okay, so EVs, when EV came into play, EV has changed the ecosystem. As a car has more become an electronic equipment than the mechanical equipment. A car is right now completely built of sensors, sensor based automation. Like it has, it is not like a previous way car what we have seen 20 years back or 15 years back. So it's especially in case of Tesla, it is more like a computer than a car. Okay, so as an early mover, Tesla got a good growth, good early mover advantage. Same in the case of Tata Motors in India. Tata Motors, Ola Electric, these companies has got a easy early mover advantage. Like they are not perfect compared to the Tesla, but these companies are like they are early movers. They have very less competition here. They are not like they cannot that we need to check whether they can bear this competition in the coming years or not, but they got a free early mover advantage, so they got a bigger market penetration. So definitely they will make a higher ROC in coming years because of the sector, because government is giving some sort of advantage, some sort of tax rebate to them. So like so they are giving better, like they are giving more, um, uh, they will earn more ROC in the coming years. Plus sector company should survey for at least 30 years. If you are planning to find a 100 bagger, then you should focus, you should think that this business will last for at least 30 years, because you have already seen 14 to 25 years are the average time period to get a 100 bagger stove. So if you are searching for a 100 bagger stove, then you should think that this company should last for at least 30 years. It should have an economic mode, it should have a pricing power. Okay, these are the things. Then promoter should, ideally promoter should be founders. If promoter is promoters are founders, then good, they will be more visionary people. They will be able to guide the company much more easier compared to the others. Am I audible now? Any issues?
No issues.
No
Sorry.
issues. No issues. Okay, thank you. So somebody is asking what is a sunrise sector. Sunrise sector is a sector which we can accept, we can expect a growth, higher growth rate compared to the other sunrise sector. For example, solar, renewable energy is a sunrise sector. Government is funding renewable energy, government is promoting renewable energy, so it is a sunrise sector. So other sunrise sector you can say EV is a sunrise sector, because everything we need to control the pollution, we need to be eco-friendly. So eco-friendly things or renewable things will be the coming themes, coming decades theme. Like next year, next 10 years, we will focus more into the things which are more good for the environment, which can be harmless for the environment. So these are the sunrise sectors, these are the sunrise themes. Other you can say artificial intelligence, it is a sunrise theme, because everything is dependent on AI. Every company is seeking AI help. If a company is not using AI in this era, then that company will be over by 5 or 10 years. So they will become outdated. So if the company is using AI, is companies developing some kind of AI, some kind of AI related technology, then that is good for a company. If company itself, their main product itself AI related thing, then it is good. It is also again in the sunrise sector. Another sunrise sector I will tell, maybe some many people might disagree, but logistics is another sunrise sector. Okay, now what we are seeing here in India, we are seeing extensive construction of the roads, rails, and the airports. So what is happening? Peripherization of the urban cities. If you are checking in the last 20 years, 30 years, what you are seeing in major cities are becoming bigger and bigger. People from the villages are shifting towards the cities. People are moving from villages to the cities like Mumbai, Delhi, Bangalore, etc. Okay, the job market is concentrated in the metro cities. Okay, now the metro cities are have become bigger. Now, more companies cannot enter into this metro city. So these metros will peripheralize. If Mumbai is a, suppose Mumbai is a 60-kilometer radius city, Mumbai now will start peripheralizing. It will become 80-kilometer in next 5 years. Maybe the radius will become 100 kilometers in next 10 years. Okay, so these opportunities will be focused on the peripheries of the cities. These peripheries of the cities will become again a satellite city. Suppose if a company is holding a lot of land in the periphery of the city, this land will get higher valuation. Okay, so this has been happened previously also. If you check through the assets of a company, please check what all asset this company is holding, what all land asset these companies are holding. If any company holding any huge land banks, any huge land in the peripheries, then this company has a good chance. It will be very difficult that a greenfield city will emerge. Like if you see Amravati, if you check Dolera, okay, these are greenfield cities. These cities are they are building from the scratch. It will be difficult to build such cities in India, but the natural cities, they are going to peripheralize. So those companies who has land in the peripheries, they will become much bigger. If you check into the list of the companies in Mumbai, there are so many companies with a lot of land banks in the peripheries of the Mumbai. So this land will be worth as crores and crores after 10 years. Okay, so this might be a barren land now, but it will become a industrial hub. It will become a big town after some years. So this will act as a catalyst for the growth of the company. Okay, so again, long growth runway that we have already discussed. Promoters should be founders. Now market has a, like market is giving more valuation to the companies which promoter which promoter is acting like a founder. Like market is giving priority to them, because market is trusting more on promoters which, who are founders. Like they can guide the companies much better way than the first generation, than the second generation or third generation. Okay, so somebody is asking what is ant sized company. So for me, I considered ant size as less than 100 crore. If the market capitalization is less than 100 crore, I will consider it as an ant size company. Anything less than 100 crore, you can also consider it as an ant size. And means small size. Okay, then cash flow is the king. Company buys in debt and sells in cash. So company needs to generate cash flow. If a company cannot generate cash flow, then company cannot survive. First lesson of any business. Your business should generate cash. It should not go on debt. If company is doing some business, suppose in a hospital, most of the things will happen. If you are going to a hospital, you will pay in cash. Okay, you will be, if you want to go to a hospital, you want to do a surgery, you have to pay amount in cash, or you will be covered with an insurance. So either you will pay directly to the hospital, or insurance company will pay directly to the hospital. Now you just see what the hospital is doing. For a surgery, there will be many things, right? There will be many things which many consumables will be there. There will be instruments. Okay, hospital will not pay directly to the companies whom they are dealing with. They will keep a gap of 20 to 30 days. Company will procure the required items, but they will not pay immediately. They will tell, we will pay you after 45 days. So the other company will say, okay, I am fine with that. Okay, then only they will procure the items. But you are paying upfront. Before the surgery, you have to clear the amount, right? You have to pay the complete amount before the surgery. So the hospital has your cash for 30-40 days. So the other ones are employees, like doctor will get money after 30 days, right? Nurse will get money after 30 days only. So hospital has a huge cash flow for the upcoming days. Okay, so what they need to focus is, they need to keep the cash flow continuing. So other scenario I can tell you, some companies which are operating with the government. Okay, one road, suppose one infra company is there. Okay, they are making roads. They have a contract with the government. Okay, so they are telling like, we will invest, sorry, we will make roads, you just pay us later, as stages. So government will pay, if it's a 100 crore project, government will pay 25 crore and tell them to do, you do as like for 25 crore you do. Then they will tell, we will give you money, you just do the remaining work also. So the contractor will be like pressurized at that point. So they have to complete the thing also. So they will get force from multiple layers, and they will do the remaining portion also. Then they will have to again go to the government and tell, guys, please give us money so that we can finish the remaining thing also. Then they will pay partially. Okay, so in such businesses it will be difficult. Cash flow will be an issue. You should invest in companies which has an easier cash flow. Okay, plus growth plus cash flow should be positive. If not just cash flow is happening, company should be able to grow also. Yeah, if we are doing a retail business, for suppose I'm running a grocery store. Okay, I'm running a grocery store in my hometown. Okay, my hometown has 100 people. Okay, these people will come to me. They will start buying from my stores. Okay, so my growth will be limited, unless otherwise I am not expanding the store. Okay, if 100 people will try to come to my store, and they will try to purchase whatever things are in my store, they will buy. Okay, if I am mainly focused on the groceries, they will 100 people will come only for the groceries only. Okay, if I am adding textiles also, then I have done a capex. Okay, so then I should expect a growth in that scenario. In that scenario, some growth will come. Again, cash flow will come. Okay, so growth plus cash flow should be positive. If cash flow is negative, then it is like a time bomb. So I am seeing growth. So I am running a grocery store. Okay, so people are telling like, they will tell, I will pay after 1 month. Okay, they are like telling, I will pay you after 1 month. Then I am getting a huge number of sales. Many people are coming. They are like telling, okay buddy, we will pay you after 1 month only. So again people are coming, they are taking my things like their own, and they are telling like we will pay you after 1 month, then again it will be an issue. Okay, so so again, my reserves will go empty. The guy who has sold the things, they will again come to me. Okay, they will ask where is our money. So I have to collect money from these people. Then my cash flow will be in issue. Then again, what all things are keeping my cash flow? I might have taken loan from my bank. I have to pay them. I have to pay my rent. So after all, the free cash flow should be positive, plus the growth should be positive. Then only I will be able to, you, anyone will be able to run a good business, good positive business. If you are checking for a company, you just apply this principle, you will be able to find a good company. If you are running a company, you try to implement this principle, then you will be able to run a good company. Okay, then what is investment? I can tell that it's an exercise to generate risk adjusted return. Okay, investment is not putting money into the lottery or dream 11, or it is not FNO gambling. It is like, it is not putting huge amount in ultra unknown small companies. It is investing